Good morning. I'm sorry I didn't record yesterday. I thought that we'd better stay calm before the figures and the FOMC meeting. Now I think it's the right time to do a recap and see how the market reacted. So, as you know, probably the Federal Reserve increased by 75 basis points the rates yesterday, and that was broadly what the market was expecting. Therefore, this is the daily chart, and the reaction to this news was very positive. It's not only the interest rates hike to just 75 bps, but also the press conference afterwards. Powell was, I will say, dovish, but definitely not hawkish. Therefore, the market felt like, okay, things are more or less under track and we control it. We know where we are going. So the reaction was to the upside, both in crypto and traditional markets. Today we have a very important figure at 2:30 European time. So it's going to be the GDP in the United States, which will be published at 2:30 our time. Therefore, I guess the market will be more or less ranging until that time, and then we'll see what happens. If it's above expectations, equities will react to the downside probably, and then we'll see. And if it is below expectations, then we'll have the opposite reaction. And after that, the Federal Reserve Committee won't be meeting until end of September. Therefore, we have the month of August is real vacation for everybody, and hopefully we have more technicals deciding on the price action. So what do we have now? Let's go to price. This being the daily, we definitely have a higher low here. Finally, a very clear, which was exactly the same on the CME. Therefore, we have a low, higher low, even higher low, definitely a higher low, and now a higher high, and what would be missing is another higher high. So this is looking as if we could try finally and do some upside, have the upside we were looking for. I have this here. I don't know if we've talked about it. This is the weekly, although we are on the day, this is the weekly 200 EMA. And the reason I got here, because actually this is a very interesting measure. In the long run, if we don't close above these levels on a weekly basis, of course, but it will happen on a daily basis too if it happens on the weekly, we won't have a reversal of situation. And guess what? Where does this level come to? Let's measure it here. It is 26.6, which is roughly the area we think we should be going to visit. Let's bring out all the right. So this is where we were expecting some type of move. This is the 100 on the daily, and this is the 200 on the weekly. Right. I think this makes sense. So we had our first objective in terms of an upside linked to the Fibonacci retracement and extension, let's say, with 12721414. We had a first rejection here. We may give it a try again, and let's see. But often second tries go through. And then for me, this would be the second area. Of course, this would be we don't know where it's going. If this is not the reversal, we'll be rejected eventually here or here. But these are the areas for me that are of interest for the next upward move. Let's see something interesting too, confirming some kind of bullishness, we finally have bullish divergence on the daily, right? This is what is hidden bullish, but it doesn't matter. It means continuation to the upside, which is good. I think it's very good. It's not a reversal on anything. We had already the reversal in these areas, right? And let's just very quickly have a look at here, momentum and volatility. Volatility, as we said, coming down, with momentum very close to go up. Let's see what happens, right? It has to close today at 23.03. So basically at 23.50, above 23. For these to come up with the volatility coming down, this will give time for an upside probably, right? Not not a lot of excitement unless the BBWP goes up. And this for me, it's what I can say on the daily. And what we have the weekly on Sunday, but we have as well on Sunday the monthly. We'll have a look at that on next Monday. So I think this is all for the higher time frames. 4 hours is just on a bullish stance. It will only close down if we close below 21.5, which remember was an important level that was crossed to the downside on this candle on Monday, on the 25th, on Tuesday. No, Monday. I left this here because you know that I have a very small long based on the probability of the upside that we've been talking about. And this is not necessary. And I had this level as my invalidation point on a daily closure. This candle was the candle at which we crossed it. It was at the end of the day, so the daily closed below my validation point. And I didn't take any measure on this. Actually, it was the area to increase it, which I didn't because I didn't want to increase my exposure. It's small and I want it to be like that. I'm just trying different ways of trading it today, so that's why I'm doing that this way. But the reason why I left this is, although I thought it was an area I didn't want prices to go below, I was suspecting that this was motivated by the FOMC on Wednesday. And actually, this is looking more like a bear trap, right? I'm sure lots of shorts were liquidated on this candle here. Enough of them, at least. The market was becoming quite bare. And so that's why I left it, because sometimes it is very complicated. That's why I'd rather have very small positions opened and take some advantage of a breakout or a breakdown when it happens. But often the first time it's not. It's like here, right? This was somehow a bull trap. We did it, and I'm sure everybody was looking for it to go up. Me too, of course. It didn't go, and this to me didn't look like having the strength to do it either. So I still have that position. I might today, if around the GDP we have a retracement down, I might try and increase it slightly. Today I would feel it could be interesting to do, right? So this market is looking, we've just entered the bullish zone on the 4 hour. It's usually, experience tells that when the first time it comes up, it goes down again. It's not something that will just shoot up. But the market is looking like trying to put some upside. right? I would say that would be my bias for the day today. And pullbacks could be a good opportunity to increase. Let's just have a little look at this. Only to the, I like, I like a lot to see price action, right? So now that we talked about this invalidation point, I think we can take it out. And how does it look? Well, the 4 hour is definitely as well with a higher low here. Um, so um, mm, mm, let's take this off. I think this is not relevant anymore either. I even think my alerts, I'm going to do that later. Let's have a look at this. What did we have? One push, another here. Hmm? What do we know? What do we really want to know is if this is our lower high. We don't want this to go below. We don't want price to go below these levels anymore. Otherwise, this after all, this is going to definitely look green. So this for me will become a new area. Let's go for a written rectangle. So we could flirt, as I have my friend laughs about this when I talk about flirting, but we could come here. I don't think we will, honestly. Well, I shouldn't say what I think because it doesn't. It has no interest. You don't think you trade, but closing here below this on the 4 hour would be just the end of any bullish case for me. I think definitely, I wouldn't wait for an hour at all. And what's the 1 hour telling me? Well, I don't think I need this one. Let's have a look at this. Well, let's be honest and clear. If the market is going to be bullish, it has to. It will stay above these areas, right? Yeah, on the 1 hour for sure. Yeah, and I think this for me would be a clear indication that I have to close my long, sorry. And this is it for today. Let's see what happens in 5 hours now, 5.5. And wish you a very good and safe day of trading. Take care. Bye bye.